Hello, Nnael here. Welcome back to my video. Yeah, how's your day? So yesterday is the day the Independence Day from my country, so I'm not uploading any video. Now let's continue. Today we are going to talk about another outlook. I'm going to share my outlook for Bitcoin technical analysis using Elliot Wave Theory. So in this outlook that I want to share with you, we will be having different possibilities from the bull case scenario and the bear case scenario. So let's continue. Yesterday I did make a slight change from my wave count, but overall it doesn't change it doesn't change the overall directions of the wave count, but it's just having this a corrective movement and a placement of each wave. So here I'm going to show you in this first the bull case scenario. We have a Y wave here, which is the double corrective wave, WXY. This Y wave came from the all-time high of Bitcoin price, which is around 69k. So we have a corrective move with WXY in order for this bull case scenario to be in play. So from this Y wave here, we have the first impulsive wave right there. So we have the first one here, and we have an ABC correction with the higher B and higher C, and which also forming the second wave of this impulsive wave. So it's okay to assume that the higher B and higher C here in the corrective pattern is correct, because sometimes we will find it in Elliot Wave Theory. And after that, we actually should be having a move, an impulsive move to finish the third wave. So we are now in our direction to the third wave, assuming that the third wave has not been complete yet. So since yesterday I'm assuming that the third wave already been complete here, and this is the fourth wave, because it's not overlapping with the first wave here. But when I look back and calculate the wave count here, it doesn't look correct, and it's just too overuse, you know. So we are going to assume that the third wave has not been complete yet. Also considering that the target for the third wave here, which the ideal target for the third wave, if we count from the latest high before the price dropped to 17k, is around this 161 Fibonacci retracement, which is around $26,300. So with that being said, I can assume that the third wave here has not been complete yet. So inside the third wave, we have a 1-2 setup here, like this is the first wave and the second wave, another first wave, another second wave here, and we'll be having another 1-2 setup here, like this 1-2 setup. So inside the third wave, we have a 1-2 setup 3 times. So we can also able to call it a coiling pattern. So the price is coiling up in order for Bitcoin to reach a higher price. Now, and then we are going to finish this impulsive wave to the third wave here. So as I told you before, that this third wave is actually around 161 Fibonacci retracement, which is I calculated from the first wave here to from the bottom here to the first wave here and to the second wave, which will give us somewhere around 25,800 or 1618 Fibonacci retracement. This is actually the ideal target for this impulsive wave, from this third impulsive wave. So we can actually move this down here and making the fourth wave somewhere around here, which is not overlapping the first wave. But that's not the case here. So where did I get this from? Is from the 1-2 setup that has been correlating up here. So from the first 1-2 setup wave that we have, I just drew a Fibonacci trend line and it brings us to around 29,000. So that's the ideal target for the impulsive move to complete the third wave. So yeah, and let's take a look at the bear case scenario before we zoom in. Okay, and this is the bear case scenario now that I have. So in the bull case scenario, I have a double corrective pattern from 69k all-time high to the Y wave complete here. But in the bear case scenario, I am assuming that we have a triple corrective pattern, or WXYXZ, or you are also able to say it a Elliot impulsive wave 1 2 3 4 5 down. So in Elliot impulsive wave 1 2 3 4 5, right now we are still has not completed the fifth impulsive wave yet. So this low here, 17k, it's just the third wave of the impulsive wave from the 69k, and this coiling up pattern here, it's actually just a corrective pattern to complete the fourth wave. And after this fourth wave complete, we will be going to complete our fifth wave of the impulsive movement from 69k. So inside this fourth wave, we have a WXY corrective pattern, which is a W, ABC to W, and another ABC to X here, and ABC to Y. And I assume that this is complete the fourth wave here. So after that, we will be having a major impulsive move down to complete the fifth wave, which is somewhere around here that I calculate from the all-time high, which is around 8,800. The 1618 Fibonacci retracement, that will be the ideal target for the wave 5. So let's zoom out. Let's go to the 1 hour time frame now and zoom out. So yeah. So in this bear case scenario, we are now in 1 hour time frame, and I already zoomed this out. Once again, we have a complete 4 wave already. Now we are going to the first impulsive move down. So right now we are from this fourth wave here, we are complete the first impulsive movement, which is 1618 Fibonacci retracement from the from this low here. Let me show you. Yeah, so from this this will be the ideal target for the first impulsive move down. So let's assume if the price will be able to go here to 22,800, we will be having a reversal, which is a corrective pattern. But apart from that, we are also able to say that this is the first wave of the impulsive movement down. If we count it directly just from here, we have this 1618 Fibonacci retracement as our sub-micro impulsive move down to complete the first wave here. So now assuming that we have the first wave, and this is a nice corrective pattern A, B, C to complete the second wave, and we are now in our direction to complete this the third wave in this bear case scenario. But actually the bear case scenario right now is still less likely to play rather than the bull case scenario, because we are now standing right nicely above the 50-day EMA, so we are also having a rejection in above the 50-day EMA, so it's safe to assume that the bear case scenario might not be in play, or this fourth wave here has not been complete yet, and we are able to extend the WXY corrective pattern to triple corrective pattern, which is WXYXZ, to complete the fourth wave here. And also, if even if the coin price moves to around 30k thousand, the bear case scenario here might still be able to play. We can still use WXYXZ pattern to complete the fourth wave here, even if the price moves above 30k. As long as it's down below 32k, the price will still the impulsive move down still be able to play, because the first wave of this impulsive move wave from 69k is at around 32k. So if this fourth wave here, actually somewhere around here, 28 or 29, it will still most likely be able to play the bear case scenario here. So but it's more or less likely, but the price might still be going down to around 10k or 88k. But if we break the 32k, then we will be having another bull market run, so something like that. Now that with that being said, that we have a fourth wave complete, we are now in the first wave, second wave, the third wave, fourth, and the fifth wave to complete the first the first intermediate impulsive wave to complete the fifth wave. Let's calculate where will be the ideal target for the third microwave. It's somewhere around here, 161 Fibonacci retracement, which is 21,700. If we are moving to 21,700, that it will be more likely that this bear case scenario to be in play, because first first the bear able to reclaim the latest low, which is around 22,600. That will make the wave count for the bull case scenario here be invalid, so that will make the bear case scenario more likely to be in play. But it also doesn't change that the bull case scenario will not be able to play if the price actually reach the target of this 161 Fibonacci retracement to complete the third wave here, because in the bull case scenario here we are still able to count this as our first impulsive wave, and this is the corrective wave. So that's not, with that being said, it's not even going to assume that the bull case scenario cannot be in play again, but it's just considering recalculating the wave count. So that's my perspective for Bitcoin here for the bear case scenario. Now let's take a look at the bull case scenario in this time frame. So yeah, this is in the bull case scenario here. Let me zoom out first. In the bull case scenario here, we have a completed 5 micro impulsive move here, the first one, and here, because it's a little bit tricky and a little bit messy, I cannot count this wave as an impulsive move or a micro impulsive move, but I can count it as the first wave of this micro impulsive move here. So right now we already complete so after this 5 completed wave of the micro impulsive move here. We have a WXY corrective pattern here, and from this start here we have another micro impulsive move up, which we already right now complete the first wave of from the 5-wave impulsive move, which I mark it as a micro impulsive wave or something like that. So, and right now after we complete the the first impulsive move, we have a correction, which I presume that we have a WXY correction here, and it's already been complete here. But also this WXY corrective pattern able to play, as I told you before in the bear case scenario, that it's still able to going lower. Since let's calculate this from this height here. We have this as our first wave, okay, 1618 Fibonacci retracement as our W target, or we also able to count it as the A wave corrective pattern. Inside the A wave we have 5 impulse, minuscule impulse, which is 1, 2, 3, 4, 5 here, or here if you can, and then to the B wave here. To the B wave here we have triple 3-wave pattern, which is a corrective pattern, so an A, B, C, and forming the B wave here. And to the C wave here, if we going to 5 minutes time frame, we are going to find a nice minuscule impulsive move down, so it complete the C wave here, which is also complete the W wave of this corrective pattern. And from this W wave here to the X wave here, we have a minuscule impulsive move up 1, 2, 3, 4, 5 here. And right now we are already also complete the A, B, C corrective pattern to complete the Y wave here, and assuming that this is the second sub microwave, and also complete the second microwave. So but it's the price will still being able to go even lower, since we have this as our target price. For the ideal target of our Y wave here will be somewhere around 21,800. So to assuming that this is the A, the B around here, and C might be somewhere around here, it will be the ideal target for the corrective pattern. And with that being said, this micro impulsive move cannot be applied anymore, because let me show you this. With that being said, this micro impulsive move cannot be applied anymore because it's overlapping the starting point here, and I'm gonna have to recalculate the wave count here, and this is why it will be the first wave of the micro impulsive wave, and we have a 1 to set up here, and the third wave here, 4 and 5. So this is the completed 5 micro impulsive wave, and again this is just a corrective pattern. So we will be starting another micro impulsive move down up to complete the third wave of the minute impulsive wave somewhere later, if the price actually go to reach this 1618 Fibonacci retracement. So yeah, that's what I said before, that even if the price drop lower, the bull case scenario here still might be able to play. It's just something like this. So we have a completed 5 micro impulsive move, and we have an ABC corrective to Y and X and ABC to Y here. That's what I call a correction, a corrective pattern. So yeah, even if the price move lower, as long as it's still around above 20, yeah, as long as it's still above a let's say this, as long as it's still above 20,800 or 20,600, the bull case scenario might still likely be in play. Okay, so first the bull need to defend it, don't let the bear reclaim it, and then after that the bull also need, if the bull lost it, this is the bull last support, maybe around 1800. So with that being said, the possibilities of the bear case scenario to be in play is more likely to be happen than the bull case scenario. So yeah, so I just draw this rectangle yesterday here, and the price actually moved down to my target here, and I'm assuming, and now we are going to complete the third wave. We are going to complete the third wave of this sub micro impulsive wave, to complete the 5th wave of this sub micro impulsive wave, to complete this third wave of micro impulsive wave, in order for us, for the bull, to be able to complete this third minute impulsive wave. So yeah, we still have many waves to be able to play. First, we are still missing this third wave of this micro impulsive wave, and also we still missing this third wave of this micro impulsive wave. This is the sub micro and this is the micro, and we still missing the minute impulsive wave, the third minute impulsive wave. So yeah, considering that, with that being said, I also drew a parallel channel here in order for us to confirm, even if the price may be able to break above this parallel channel, it's going to retest it around this support and it's going up. I think if it's able to break it around 23,000, or this X point here around 24,000, then it is confirmed that we will be having an impulsive move up to complete the third sub microwave. So yeah, but if the price actually break below this parallel channel, it's going to retest it, of course, as the resistance, and then it's going back. And with that being said, the bear case scenario still will be likely more calm, will be more likely to be happen, so something like that. So yeah, that's my opinion, that's my view of the coin price here. So, and also I'm going to show you something like this. Let's go to a the 4-hour time frame here. Let me hide this first and hide this. Okay, so yeah, right now we are in the 4-hour time frame. We have this Copenhagen pattern here, as you can see. Yeah, and this Copenhagen pattern inside this parallel. Okay, and from this Copenhagen pattern, we're actually able to assume that the price might rally up further, even further. So even if the price actually moves lower, we can assuming we have a double Copenhagen pattern here, 1, 2, which is make the W pattern, and from here we are going to rally upward. That's my perspective, something like that. And also we right now, by looking at the RSI, we are already be having a lower RSI in 4-hour time frame. That's deep. Okay, it still have some room to go down to an oversold territory, and the price also able to go down, but I think it will be hold around this level of support around 22,500 or 600, and we are going up from that perspective point of view. So yeah, okay, so that's it. That's the update from me today. I hope you enjoyed the update, and I also hope that you might be able to spot something or to learn something new from this kind of update. And if you like this update, please consider hitting that like button, and don't forget to subscribe, turn on that notification bell so you won't miss any upcoming update from me. I'm always talk about Elliot Wave Theory, but I'm not an expert. I'm just a beginner. I just learn about it. So if you spot any mistake, just feel free to let me know in the comment below what mistakes that I made. If you think that my calculation is wrong or the wave placement is wrong, just let me know and we can learn together. Okay, stay healthy and always be happy. See you again in the next video. Bye bye.